All right, folks, welcome back to the channel. This is Jason, and today's kind of a big day if you're a SoFi investor, but for the general stock market, it's kind of a down day today. And to a degree, that's kind of expected. I mean, the market's done really, really well. And what by the market, I mean, really, the NASDAQ has done really, really well since the beginning of the year. And it's taking a little bit of a breather. This big earnings for tech. Last week we had a big earnings week for financials, for really large financials, and more of those are coming down the road as well. Financials, for the large part, beat expectations. They weren't enormous beats. And let's remember, expectations were reduced, meaning that guidance was reduced in the middle of the year, but most of them had a beat. SoFi's earnings, which I covered in a video, were absolutely amazing. As usual, the decline in their stock has not been related to a decline in their business in any way. It has really been about macro environment and just sort of a shifting of the risk on attitude. But the earnings that are coming up this week are going to be tech. And I don't expect those to be as positive as last week's financials earnings. To a degree, what's been going on lately, though, is the market seems to be fighting the Fed, which I find a little concerning, meaning this may be a little bit too far, too fast. Certainly for some individual stocks, that's been a really welcome snapback where they got unjustly punished for what was going on in the macro market. But this week is going to tell us a lot. So I made the prediction, video title, that the Fed is going to raise interest rates this week. For some people, I talked to a couple people that were just absolutely convinced that the Fed is going to pause interest rate rises. I don't think so. I do think that the Fed basically has reinforcing data now that says their policy is working. It's how far do they want to take it is the question. I was thinking even as short a time as a week ago that the Fed was still going to raise by 50 basis points. I'm backing off of that now and saying it's a 25 basis point interest rate rise. And this is the reason why. M2 money supply is dropping like a rock. So basically, M2 money supply has gone from 21.7 trillion in March of 2022. We saw small decreases. Now we've seen it sort of drop off a cliff, and now it's down to $21.2 trillion. So this is basically a $500 billion decline in the supply of money over the last 9 months or so, which is good if you're fighting inflation. Is it happening fast enough for us to start worrying about deflation? I don't necessarily know about that. But we are definitely seeing a slowdown in inflation. And that was, of course, reinforced by last month's core inflation numbers, which are the Fed's favorite inflation index. And so there's a lot going on right now that the Fed would believe or would make them believe that is going in their favor. Let me know if you guys want me to go over the investor presentation. I just did a video on the investor presentation for SoFi, so we can talk about that and a couple of other things, or you can just watch the video. That was basically just me recording a live stream and going through it. But the call, which I didn't listen to 100% of it, and I got to it after it was live because I overslept. But the call, there were a number of interesting things that are said on there. But SoFi, bottom line, is likely to be profitable sometime in early 2024. And I think that is really, really impressive. So Michael says, I think the Fed are going to do what they said they do, and I don't think the market's going to like it. We'll have another drop. That is a distinct possibility. I think that the market counterintuitively would actually react really positively to a 25 basis point rise. And I think they would react really negatively to a 50 basis point rise. Having said that, the Fed really doesn't care about market losses and gains day to day. They really don't care about your portfolio or mine. They really don't care. What they care about is controlling inflation and maximum, price stability, controlling inflation and maximum employment. Maximum employment is something that is really on the back burner at this point because they believe they reached maximum employment some time ago. The idea is that maximum employment is actually 4%. And after 4% is when you get to the point where there's imbalances in the labor market, which that may be one of the things that we experienced earlier this year. I just was in a kind of a local luncheon the other day with a bunch of business members, a bunch of business owners, and all of them kept talking about, hey, nobody wants to work anymore. Nobody wants to work anymore. And I didn't say it out loud because the last time I said this, I ended up being hated. Is that, my contention is that it's not that no one wants to work anymore. It's that no one wants to work for you. You don't pay enough, and the conditions you offer, work conditions you offer, aren't generous enough when compared to what they can get elsewhere. Hiring labor is a market just like selling your products is. You have to be competitive in that market. And that's what many business owners do not understand. And that's why many business owners, when there is a labor crunch, are going to suffer. And that's one of the things that's really hard to deal with. You're constantly balancing the needs of your labor force with the needs of your clients. And if you prioritize one too far over the other one, it's going to hurt your business either way. Suffice it to say, though, like I've got businesses in a number of different spheres. Some of them where labor is the largest expense, and some of them where it's not. Some of them where we're seeing pricing increases due to the cost of doing business, and some of them where we're really not. So I have a kind of a wider view than some of the other business owners that are in this group. But this time I kept my mouth shut about people not wanting to work anymore, and I didn't say what was really on my mind. People don't want to work for you. Let me see here. Vane H, long time subscriber, says, finally, I'm off work early enough to catch this live. You know what, man? I'll be honest with you. I moved my Monday live to 1:30 instead of 1 just for you. I've got maybe like 30 people that regularly tune into this when it's live total. And that's just an estimate. And I really did this just so you could catch it every once in a while. So thank you very much. And of course, Vane, when he is on here live, he usually throws me a cup of coffee my way. That is $3 Canadian. Let me see here. If you're working too hard, you're not charging enough. Yeah. So I guess there's some wisdom in that. There really is. My problem is I don't know when I'm really working too hard and when I'm really not working hard enough. Last couple of months, since my big cycle of actual work ended, like in November, I definitely haven't worked enough. But I'm kind of picking back up when it comes to other things. And also when it comes to my YouTube content, I'm trying to put more of it out there. The live streams, while they're fun to do, they don't bring in the subscribers and the revenue that regular videos do. So I'm trying to put out more regular videos. And I hope you like the Sofi video that I did last week. If you get a chance, Shula's Joe, check out my take on Q4 earnings in that video. And I do want to say that Sofi's getting really bold about predicting when they're going to be profitable. They didn't come out and say it, but they said they're basically going to have, GAAP profitability. I forget what the number was of, a GAAP net margin of about 20% by the end of the year, which would suggest that they expect profitability sometime in like Q2 or Q3 of 2024, probably latest Q4 of 2024, like actual, real, honest to God, verifiable profitability in that time period. So, I think that their march towards that goal is pretty much unstoppable at this point. They have demonstrated rather conclusively. Yeah. So let me address this. Sofi, and oh my God, to see what Big Bear AI did today in aftermarket. So I have not seen what Big Bear AI did aftermarket. And let me talk about why that is, though. So the S1 for Big Bear was just filed, and I want to say there's some chicanery going on with this stock right now, and it is something that I would avoid right now. The volume is low enough that it can be subject to some, like I said, some chicanery there. And I realize that it's up 156, up 64% today. I don't know on what news. They announced the closing a $25 million private placement, or voted the best place to work. But I'll tell you one thing: the S1 was filed last week or the week before that, meaning that insiders can now dispose of their shares. So and look at volume is at 53 million shares when average volume is at 2.5. And let's remember, average volume just a couple of weeks ago was 1 million shares a day. So there's something going on with the stock that's probably not very honest, and this is likely to be a lot of insiders trying to trade shares back and forth to drive the share price up because that S1 was just filed, and now insiders are able to dispose of their shares. So I'm not saying anything that's going on, something's going on, but something is definitely going on with this stock, and I'm not putting blame on anyone or suggesting any individual in particular is doing something, but somebody is. And because the announcements, the justifications, whatever, don't support the price movements that have gone on, and especially the volume of transactions is not supported by any news that's come out. So, but even after hours, it's up to 411 per share. So this was a face ripping rally today. That is correct. Yep. Yeah. Let's see. Good tip and implement on Big Boar. I'll be taking profits. Yeah. So not a terrible idea. If you look right now on my screen, the top sale here at 1612, right? That was me in like June of 2022. So as of right now, I timed it perfectly. I am the highest sale ever, and I also had options like 1250 options. No, I think $10 options on Big Bear at the time. Ended up selling those, but the same thing. There wasn't a reason for the price to spike up that high on that news, and there was probably some market manipulation going on there. If Wall Street Bets or someone like that were to pick up, Big Bear to some degree, put that on their radar. One thing I can bet that's going to happen, which is what AMC and GameStop did, is they're going to do some sort of secondary offering and try to raise money as quickly as they can, which is what Nano Dimensions did as well. They really didn't have an explanation for why their stock spiked as much as it did, but they took advantage of it with a pretty large secondary offering, and that's the reason that they're still in business. That is absolutely the reason that they're still in business, is that they were able to generate that cash and sit on it. So Ug Nakachu, I hope I'm pronouncing your name correctly. Nakachu. Okay. Says, hi, glad to catch you today. Glad to you as well. So yeah. Yeah. So killing it, Jay. I'm long-term, but not after that kind of rep. No, I agree with you. Like, I hold a small amount of shares in Big Bear AI as a long-term investment. And like I said, I made a larger term investment just because I kind of saw the online chatter regarding Big Bear AI, and I realized that volume was small enough for something to happen. In this case, right now with 53,600,000 shares trading in a day, that is really, really unnatural. And if you saw the big price swings that they had last week, so I would like to see what other news is out there with Big Bear AI. Let's remember, this is a small company, a really small company with $560 million market cap. They just went public last year. So in terms of revenues, they did 140 million in revenues right now. They just signed a deal though that'll roughly double their revenues. I think a $900 million deal over the next 10 years with it's a no definite delivery, no time constraint contract, which is becoming more and more common with some of the with software developers. It's been common for a while, but it's becoming more and more common with government contractors. So yeah. Let me see. Ug says, when did you talk about Big Bear AI? So I initially talked about Big Bear AI when they went public, largely because I was aware of some people attached to the company, and really got to look at their finances as they were going public and said, hey, this is a company that actually makes a profit here, unlike some of these other companies. Now, it's a small company. It's a dedicated government provider at this point. They use their IPO money really to sort of expand into the private sector. But at this point right now, they've got a lock pretty much on doubling their revenues in over the next 10 years or so long as they can meet the terms of the contract. But that means that this company's at least on solid footing. Can they grow faster than what they've already proven that they could grow? Because this is going to take them to about $280 million a year in revenue. You really need to grow in this space as a type of software provider like that's publicly traded. In order to get the sort of growth that we expect out of this type of business, I want to see revenues top $1 billion a year sometime in the next 3 years. I will buy more as we go along and as some of this stuff changes hands. But remember, like I said, the S1 was just filed for this company. So they do have like I said, there is a lot of buying and selling going on because insiders are finally allowed to sell. So another thing that's going on right now, and I haven't covered this stock in a while, but perhaps is the corporation Nvidia earlier or at the end of last year dipped down to $108 a share based on concern with the semiconductor market. I think that the reinvestment and the intention that the U.S. has to bring AI, or at least AI chip manufacturing to the United States, has caused a spike in optimism, as well as the fact that the things like Chat GPT and Google's AI platform and chat platform, which is coming out relatively soon, that is a big deal as well, and that has caused a lot of optimism. So Nvidia Corporation's fundamentals have not deteriorated. Their earnings have always been sort of out there in terms of volatility. But in 2020, 2021, and 2022, we saw pretty explosive growth with revenue more than doubling and earnings more than tripling between 2020 and 2022. And of course, the stock price actually did better than earnings in that time period. But I don't worth $108 share. It was always worth more than that. I think it's approaching fair market value at this point. And if you look at 1 year consensus target estimates right now, they're at 199.72. I generally don't look at target estimates, but if I think the last time that I actually did a calculation on what fair market value for Nvidia was, it was close to $190 a share. That's when I did it when it was like $110 a share. So I do own Nvidia. This is not a company that I trade options on, largely because it's so volatile that every option strategy I've ever had has basically blown up on me. But I do use put options to get into this stock at prices that I'm comfortable getting into this stock. And my overall position on this is $50. So, a lot of times I'm selling puts on Nvidia. They expire without getting exercised, but hey, I get to keep that premium. When Nvidia dips below $150 or $160, wherever I decide to sell that, that's when I end up exercising those options and buying Nvidia stock. So, but when it comes to selling covered calls and trying to do like a wheel strategy on Nvidia using options, selling covered calls and then selling a cash secure put when it finally exercises, man, I put the delta at 0.7, doesn't work. Put the delta at 0.8, put the delta at 0.9. It just doesn't work. It's too volatile to have a sort of predictable regular stream of income. For me, this is a buy and hold stock where I need to do a better job of choosing when to purchase this stock or when to sell this stock. Like I would love to have sold this stock at the 52-week range high of $289. I think it got as high as like $400 about, let me see here. I think it got as high as about it got as high as about $326 in November of 2021. So not the 400, but sure wish I had sold back then. Right. And then $272 in March of 2022. And $289. But I sure wish I had sold at that point and then bought back in 6 months later. But if you look at the history of this company, it is relatively volatile. And you can look at from 2016 on, it's relatively volatile. It goes through pretty big swings. Before that, it was relatively solid. So hey, Oog says, I bought puts on Nvidia last week. Wish me luck. Hey, what is your strike price on those puts? So, Shoeless Joe, I don't have any AMD holdings. I pay attention to it, but AMD is not a company that I hold. I do have, I forget which ETF it is. It's not in the portfolio that I have up right now, but I do have just sort of like a semiconductor ETF. But the only individual chip stock that I hold is actually Nvidia at this point. Although I am looking at buying into a couple of others, I don't hold any AMD. I have in the past, but I own AMD for like 11 years or something like that, and finally sold it at a high point and because I needed that money to start another business. But yeah, so typically, if I don't, like I said, I don't have that many individual stocks, probably like 30, and the rest of my portfolio is just put into ETFs, and I don't really think about it. So uh, just share the vid link to my stock Facebook page. My friend and I started. Awesome. Which vid link? The one that I just did on SoFi, or yeah, there we go. Yeah. So I'll talk about Big Bear AI again at some point. But in terms of what we know about the business, there is not. Oh, Ugnak says $100 2025. You're talking about the January 20th 2025 calls at $100. Man, that's you're buying a deep in the money call. What you're really buying is what's called a leap, a deep in the money call. You're probably paying about 50 cents on the dollar for it at this point in terms of current price. I think you're probably looking at a really, really good purchase. That's a long-term purchase. When you finally either dispose of it, you are likely going to see. I'm sorry. When you finally dispose of it, it's going to be long-term capital gains rather than short-term. That could be a really good move. Buying, or selling puts. I'm sorry, buying puts on Nvidia at 100 for 2025. I'm sorry, I thought you were buying calls. Never mind. You bought puts. Okay. So you bought puts. Interesting. So buying puts generally to just to hedge. I don't see Nvidia touching $100 before 2025. But if it does, you're going to be in luck. I would actually sell puts on $100 for 2025, and I think I would make pretty good money over that time period. But at this point, right now, I don't want to tie up 2 years of either credit or cash in order to make that bet. I'd rather do it a little more short term. Phoenix is the one we're on now. So the live streams where I'm the least prepared and probably make the most mistakes, those are the ones you're going to share with your friends. Okay. I'm cool. I got it. Get them to come on live and view the live stream to make comments and ask questions. Which reminds me, guys, if you have questions, let me know because I'm very curious to see what you guys think about what's going on in the market right now. We've had a bit of a run up. You know what? This is the argument or the article that kind of upset me. Not upset me because I'm not emotionally attached to SoFi or Anthony Noto. But it says that SoFi technology has improved so quickly is no surprise. Here's what I do. Look, that SoFi technology has improved is not a surprise. It did not improve quickly. It has basically improved quarter by quarter without stumble since it went public, right? And we have data going back 2 years before that as well, like real data that they put in their investor play deck, right? So essentially for the last 5 years, we have data that conclusively demonstrates that SoFi keeps getting better, keeps improving their current revenue streams, keeps adding more revenue streams, keeps expanding their business footprint. And really, if you look at the contribution profit from their technology sector, that doubled in the last year, right? That's their contribution profit. So they're reducing expenses and they're actually growing the business. And contribution profit was only like 360 million or something like that, which is nothing compared to lending at this point. But it is growing and growing and growing. And these relationships are going to be really sticky. The only thing that worries me going forward about the Technisys Galileo ecosystem here is that we are probably going to see some fintech businesses go out of business. Things like Dave. I don't know about Dave. I'm saying but like little small companies that are trading under $5 a share right now could be in danger as we move forward because some of the private equity money and venture capital money is drying up for fintechs, which means there's going to be less investment this year. And I think that it'll be probably a year, 2 years from now before we see more investment in that sector, which means it's going to be difficult for these companies that are struggling right now to raise money to stay afloat. SoFi Technologies, because they have the bank charter, because it's actually companies that are coming to them to use their technology platform to save on money, that they're not in that same position. They're going to be benefiting from the cost-cutting trend that's going to come with these various fintech companies and any new ones that are created. They're going to say, we're not going to pay the expense of developing our own software and maintaining a full technology stack. We're going to use what Galileo offers and what Technisys offers. And little by little, incrementally, SoFi Technologies is going to benefit from that. And there's a small level of fee income that's just going to build and build and build over time. And yeah, I think that's going to be, like I said in that video that I just made today, likely in 5 or 6 years, the technology platform may be generating just as much money as lending. I don't really understand puts and calls, and I don't think I want to. I invest only money I have. You're still investing money that you have when you trade puts and calls. For the most part, you can choose. It depends on the level of account that you have, but you can choose the level of account that basically doesn't put you in risk and going into debt at any time. I think it's called level 2 options trading here. I don't really remember, but that's basically you can sell covered calls or you can sell cash secured puts, meaning that you can sell someone the right to buy your stock at a certain strike price, and you can buy or sell the obligation to buy a stock in the form of a put. But there's a way to set your account to where you only do that with the money that you have, Bram. It's a really good way of generating an extra 4 to 5% per year income on your account without taking that much in the way of additional risk. For example, like I sell Tesla calls all the time, but so far out there that I'm generating like $50 every 2 weeks on every 100 share block that I have. But and there's not very much of a chance that any one of those is actually going to be called, but occasionally I do have to unwind those trades. And at least one time in 2021, early 2021, when I did that, it cost me $8,000 to unwind that trade. But when I look back at all the money I've made selling options on Tesla stock over the years, I'm way far ahead in that, and way far ahead of simply just owning the stock. And the only reason I didn't eat the sort of $8,000 call is because I don't want to fire off a taxable event. I'm a little bit over that at this point. I did have a lot of losses that year. I did sell some Tesla stock in order to realize a loss. And now I will be repurchasing some of that stock probably a few weeks from now. But it's just a tax loss move in preparation for this year. Like I'm doing it this early this year. Yes. Hiker Dave says $19 average in SoFi. Ouch. Earnings today is a nice start in the right direction. I think that my average is probably close to 15 now. I bought some at this lower price. My average is pretty close to 15. Not a short-term investors there. I'm tired of looking in red, but this is a nice start, kind of back in the right direction. I do in just to sort of demonstrate my level of conviction when it comes to SoFi. I do own staggered calls at pretty much every 3-month block for SoFi. Buying them at $6. I have some expiring March 17th for $6. Those look like I'm going to be able to sell that for a big profit. I have some expiring at like $7 or $7.50 in. I think it's maybe $7 for June, and like $10 in December of 2023, and like $12 in January 2024, and then some all the way out to 2025. I bought options out there in small amounts when it was dirt cheap. The only one I got burned recently on a leap that I purchased that expired completely worthless on January 20th. That may be the first time I've ever lost money trading leaps, like literally. Right? Yeah, that may be the first time. So, Hiker Day, please wait for the next good dip at dollar cost average by buying more. Not financial advice, but I do like the company finally turned green today on them, but I'm looking to buy more. I'm struggling with not buying more. Like I want to lower my overall cost, right? But in the long run, it's not going to matter if I'm a 10-year, convicted hold, or if I have a 10-year conviction for this stock. The difference between $5 and $15 in acquisition cost isn't going to matter when 10 years from now the stock could be $100 a share and have split, 2-for-1 split at that point, right? That could be a big deal. It's not going to matter that much in that case, lowering my overall cost. I'm not trying to turn a profit inside of a year or two. This is a minimum 10-year hold for me. Okay. The reason I wouldn't buy more is that SoFi is getting close. It's not up to 10% of my overall portfolio value now, but I already have one monster stock in Tesla that is over 10%, and I have got to start reallocating once Tesla gets back to like 250 a share. I'm going to start actually reallocating my shares. So let me see here. Jay, do you have time to look at the Tesla chart and see what may be playing out and maybe see a decent reentry point considering the Fed meeting, big earnings come and did sell some at 180 after the rip. So I'll be honest with you, like I don't base any do not base any trading that I do off of charts. And if you're a long enough holder in the stock, you probably won't either. Particularly when you go back and you look at the research that's been done on the process that actually works when you practice it over the long term. You confirmation bias when you're trading based on these charts and it works a couple of times and then you think, wow, this works. And you start ignoring all the times that it doesn't work, right? But Tesla, had a 70% run just in the last week or so. And a lot of that has to do with this is my honest opinion on this. Tesla's fundamentals never really declined at all. They didn't really deteriorate. This was all a result of not the Fed either. Like it was really a result of bad messaging by Elon Musk. I think that was a real kind of like chicken poop move for him to say, look, the reason why Tesla stock is going down is because of the Federal Reserve. And well, you just don't know economics 101. I think that he did a real disservice to a lot of the people who have put their faith in Elon Musk to run this company well. Like we share his vision of a carbon neutral transportation economy, maybe even a carbon neutral economy going forward. And I don't do it for the reasons that everyone else does. Like I do it because I want to break the monopoly on politics that energy has in our country. And I want to break the cycle of energy wars that we've been going through for the last century and a half. This is the reason that I support it, right? Oh yeah, go ahead. Don reminded me to remind everyone to hit the like button if you can. So that's the reason I initially supported it. Number one, electric cars are just cool. And I thought that from day one in 2011 when I bought my first 100 shares. But my reasoning was always different than simply having a carbon economy. It was breaking the current cycle of basically economic and political interests that are completely aligned. There's going to be a new alignment. I just want to break the old one. And it's because I worked for the oil industry for so long. But when it comes to Tesla, I have never put into my calculations the fact that we may have autonomous taxi business at some point. I don't believe that is necessarily yet a reality in the time frame that Tesla says it can be done. And in the time frame that ARK Invest says it can be done. I don't think it will be done. There's in that time frame. There's also no guarantee that Tesla will be even the first company to do this. It could be another company that really cracks the code on autonomous taxi service. It could be that it's far less popular than we think. I thought that Elon Musk buying SolarCity would be a better deal than it has been as well. And I thought that the energy generation business would grow faster than it has. But the energy storage business for Tesla has grown a lot faster than it has. So I generally consider energy storage and cars, essentially the transportation, to be their big money makers. And I've kind of thrown everything else out of my calculation. Even so, my calculation based on 7.7 million vehicles, I probably need to raise that a little bit, but 7.7 million vehicles being produced by 2030, with the energy business taking up a lot more of the overall revenue pie than it did before, my sort of 10-year price target for Tesla is about $1,500. Okay, so roughly 10x from where it is now. So the thing is, though, none of this was helped by Elon running his mouth off, and Elon's mouth is the biggest danger to the stock. I've been through this before as an investor. He is just not very smart socially. He's very smart in a lot of things, but definitely not very smart socially. He's also in a little bit of trouble when it comes to shareholder lawsuits. He, more than any other CEO that we've ever seen, is going to be dealing with this for years and years and years. This is not going to shake out anytime soon. it's employee lawsuits, Twitter employee lawsuits. They decided that there's no cause for to have a class action lawsuit. So now it's going to be thousands of individual cases. It's going to end up not being thousands of individual cases. It's going to be the couple hundred people who can actually afford it. Why do I know this? Well, because I've been through it before. Okay. So I mean, almost something exactly like that. But yeah, but the concentration on Twitter caused the stock to go down. The engagement into politics has also caused the stock to go down. It's fine to have political opinions. I just don't think you should use this giant platform to do that when you end up pissing off the very demographic of people that are most likely to buy your vehicle. Okay. That's what I think was probably the most damaging thing that he did in that time period is he just started acting like a jerk. And I know people who, for a fact, decided to buy something other than a Tesla that was an electric car just because of Elon Musk. That would not prevent me from buying a Tesla vehicle. The only thing that will prevent me from buying a Tesla vehicle eventually is finding one that fits the needs that I need, meaning one that fits in my garage where I can charge it, and can also tow my boat, and also isn't ugly. That's my wife's condition. She hates the Cybertruck. I'm still working on convincing her with the Cybertruck though. But she saw the guy that has the Rivian in my neighborhood, and she said she will allow me to own that. I just sort of laughed. But yeah. Let me see. Oog is fighting not just big advertisers and middle levers to pull. I don't think the big advertising has that much power over Tesla. They've done everything that they've done without any advertising at all. They've done everything they've done really in the face of big media, especially like Car and Driver Magazine, all these consumer reports, all these things that are controlled by their advertisers have really come out anti-Tesla, and Tesla has just kind of punked them the entire time. So I don't think that big advertising, and it's really been the rise of the internet, and sort of the free exchange of ideas on the internet that has allowed Elon to really take this, in a lot of ways, to take Tesla, to take less Tesla to these bigger levels, largely because big advertising has really lost their power. You look at Ford and GM, they're spending more than $1 billion each every year to advertise their products. Tesla spends none. I don't know how much money they have invested in their dealer network. Tesla has no dealer network. They have a few service centers. And the fact that the need for service centers is going to be far less because there's far less maintenance involved with these electric vehicles is pretty amazing. And yeah, so let me see here. If you believe the polls in UK, there's a high chance that Labour will win the next election. They say they want to make energy 100% renewable or nuclear by 2030. It's probably going to end up being mostly nuclear and some renewable. I've looked at the math involved with solar and wind in the UK. There's some really promising opportunities for wind power in the right location. Solar power produces a lot more electricity than you may think, but than anyone may think. But it's really the big growth for the UK is going to have to be in energy storage. They're going to have to generate energy where they can and store it. I think that it's probably going to be nuclear energy. It may actually be more difficult to do it there than it is even here in the United States. And it's really difficult to get a nuclear project off the ground here in the United States. We may see smaller modular nuclear reactors. I know this is becoming more and more popular online. I'm still not convinced by what I understand about the science on that, but yeah. So let me see here. Big advertising controls big media. They do. That's where the money comes from. But the money hasn't mattered when it comes to Tesla and them growing their product. So, and I like you more and more every time you talk, Bram. Politics is the Only Game by Robert Heinlein. Have I not discussed? I don't think I've ever discussed Robert Heinlein, but when I was a kid, from like 15 to 25 or so, Robert Heinlein was one of my favorite authors, as science fiction authors. And really because I grew up in a really small, isolated, conservative place where people just didn't think out of the box. Robert Heinlein was like absolutely out there and weird in terms of science fiction. Today he'd be considered definitely not so, but those ideas were absolutely amazing. But I don't actually remember Double Star. I don't. So I remember a lot of other books that I read from, but not that one. Yeah. Let me see here. Dewey's probably meant media and advertising. Media has been pretty rotten for a while, like telling people demand is down and that earnings are going to be awful. And then we saw how that played out. Um, I'm honestly not sure that anyone. I think that was a pretty smart move to predict that demand would be down and earnings were going to be worse than they really were. It's better to exceed expectations than to have high expectations and not make it in the business. And CEOs are really the ones who probably set the tone for this by reducing guidance in second quarter of 2022. A lot of companies reduced guidance by second quarter of 2022. I think that the reduced guidance for second quarter for SoFi was only like $50 million or something like that. It really wasn't that much in terms of the reduced guidance, and they still exceeded the original. I believe that they exceeded the original guidance as well. So China, I think, is actually building 35 new nuclear plants, but China has zero choices. They really don't have any significant oil deposits on their own. With literally 2 ships, the United States could block their entire oil supply and choke them off. They'd be totally dependent on a single pipeline coming from Russia. And so they don't really have a choice. They must invest in nuclear and they must invest in renewables just because and I think, look, they're not just looking at conflict here. They're looking at all kinds of breakdowns in the global energy supply chain. And it just makes sense for China to be more energy independent than they are. They still are going to need imports of natural gas and lots of it. But when it comes to other things for generating electricity, yeah, I think that, and I just saw this like yesterday in an article that they're building something like 35 new nuclear power plants. They're not waiting at this point. Let me see here. See what I missed. Guys, 18 watching. Let's get some more likes in the vid. Help our friend out after his efforts doing these vids for us. Thank you so much, Vane. It's always nice to see you on here. And thank you so much for always being a big promoter of my channel as well. I'm trying to see if I missed any comments before. Yeah, Don Caesar Shadem said hit like. Thank you so much. And Pat Mulligan says, love the explanation of your trades. It helps clear it up in my mind. Yeah. So, and trust me, guys, I don't do a lot of actually selling stock. I really don't. And I take a little bit from my earnings every month. I added them to my accounts, and I take the income that I generate from selling options, and I also end up buying more stock with that. I tend or to buy longer call options is what I do. But the whole goal of me selling options is to not have them exercise on the call side, but to exercise them on the downside because I have cash to back that up usually. So, yeah, let me see here. And we are looking at, there's some very interesting thing here. So Ford says they're cutting the price of the Mach-E by $6,000 to follow Tesla's lead. They don't really have a choice. But here's the issue with that. Tesla's margin on the models that they cut their prices on is massive compared to the margin on the Mach-E. I'm not saying that Ford won't get to the point where the margin on the Mach-E is much lower, but the volume that they produce right now, because of economies of scale, have really prevented that margin from being very good. Cutting the price of the Mach-E by up to $6,000 is probably going to make it a loss leader for them at this point. They're going to lose money producing this vehicle. So on the Mach-E, at least, they are back at like 2017 timeframe for Tesla, right? They're going to be losing money on that vehicle, and they're going to be adding some other things here. But look, the Ford Lightning is sold out for this year. It's going to be sold out for next year. And eventually this is going to be I think the Ford Lightning is probably going to be the best selling electric vehicle in the United States within a couple of years. It'll absolutely be that way. And it's a good truck. It's a really good truck that looks like a truck that can do everything that a truck can do, except really it can't tow like long distances. So yeah, Vane, that's what Vane said. Alex, Ford doesn't have the margins for such price cuts, but what choice do they have now? For US OEM is only one taking EVs in a serious approach right now. Actually, so GM is actually taking a little bit more seriously than you think. I forget the name of the vehicle. That I think it's the Equinox that's coming out. That is their first serious attempt to produce a consumer vehicle that is sort of like that light crossover SUV. that has 250 miles of range, and that's really really cheap. So I wouldn't say that they're the only one not taking it seriously. So later in the stream, can you take a look at Elgin L, a major insurance and pension provider in the UK? It currently has a 7.31% dividend, which is quite high. Yeah, hold on a second. So it made a household name, major insurance provider in the UK, but I have let me see here. I don't think I can make an intelligent comment on this stock, Michael. I would need to look into this a little bit more offline. Oh, that's not encouraging. Declining earnings since 2009, or declining revenue since 2019. A little bit of improvement in earnings this year. I would need to know kind of the reasons behind that, and I would need to know why this company has had declining revenues for the last 3 years, but the mean recommendation is still between a buy and a hold. That's interesting. Let me see here. So yeah, any thoughts on big earnings for this week? Apple, Amazon, and Google. I think that all of those earnings in tech are going to be not as bad as we feared. I think that Microsoft's earnings are going to be probably as bad as people expect. But I think Apple is going to do particularly well. I think Google's going to do not as bad as we feared. And I think Amazon's going to do not as bad as we feared. Microsoft is the only one that kind of worries me a little bit. And that's just because there were some interesting numbers put out by their cloud ventures that would seem to suggest that cloud spending is really declining. Google is going to suffer from declining advertising. And Apple looks like they're probably doing just fine, even though there has been a decline in actual device sales. They look like they made some gains, and at least the chatter is that they may have made some gains in other ways. So we see here. Hi, Jason. Do you think the BYD can enter the U.S. market in a meaningful way to get around tariffs? So I don't. So they're not. There's not going to be tariffs on BYD selling vehicles in the U.S. market. They already sell vehicles in the U.S. market in terms of like buses and trucks and things like that. The bad thing is they're just not eligible for that subsidy. Their production costs, though, in China, though, are probably far lower. The production costs are actually far lower than what is in the United States, and I think they can enter in a competitive price range here. The hard thing is going to be selling a Chinese vehicle in the US market. That's going to be the tough thing. China has had only moderate success selling any vehicle outside of China, right? And that's kind of the thing that worries me. But Japanese vehicles entered the US market, and if you owned a Japanese vehicle back when they entered the US market, you were ashamed to own it. And Japanese companies rapidly made improvements and catered towards the U.S. market. And it took time to do so, but they did. But really, this was the case where all Japanese products, they entered in at the lower end of the market. Japanese products were known as being crap back in the 70s and even in the early 80s. And by the end of the 80s, they are kicking the crap out of the U.S. in terms of car sales, and the quality of everything they made improved. China has had a harder time moving up that value chain in production. It looks like, though, that producing electric vehicles may be the way that they can do that. And partially it's because of how the chip industry works and how there's a lot less in the way of complication. And when it comes to an electric vehicle, and I think that they could actually do that in a meaningful way. But I don't believe that actual tariffs would be levied on vehicles imported to the United States. I think that would fall outside of the current tariffs regime that we have on there. And I actually expect the tariffs regime to sort of go away. Yeah. Michael, if I remember correctly, Texas price drops only take them back to 2021 prices. Something like that. Yeah. And Bram, thank you very much. Thank you very much for the super chat. Looks like I got more than a cup of coffee today, and I can actually afford to eat. So let me see here. What do you think about Ford's $200 billion debt? Will they be able to pay it off? Man, that is the big question, man. I'm not sure if they're ever going to be able to pay that off. I think at some point, maybe, and they can't really refinance it. Most of it's at like really, really low levels of debt, so they have zero chances of doing that in the near term. They need to improve their margins and improve their bottom line to be able to pay down that debt to reduce debt service. And this is going to be a huge drag on their company performance for years and years and years. I kind of predicted at the very beginning of the pandemic, because of Ford's debt situation back then, that they might end up being in a pretty strong position coming out of the pandemic. That has proven to be far less than true. I was really wrong on that, and I thought they'd be much stronger at this point than they actually are, and they've taken on a lot more debt than I predicted. I anticipated that they would take on debt, just not that much. Anush Gupta says, "Hi Jason, what do you think about mortgage companies like RKT in the short term and long term?" Let's see what you mean by you mean Rocket Mortgage. There's called Rocket companies now. It used to be just called Rocket Mortgage. You've seen a 30% in in some markets. We are not seeing a pretty large increase in defaults, and that's largely because in the last couple of years, lending requirements have tightened pretty quickly. You can't get what's called a ninja loan anymore, which was no asset, no income, no assets or justification needed. What it's called. But Rocket Company shareholders have got a 20% loss from the stock for a year ago. Target estimate is only 740, so it's above target estimate at this point. This is a stock that I've never really followed. It's been in decline ever since they went public. It's missed earnings estimates for the last 4 quarters, but when you look at the core, of course, estimates have been declining over the last 4 quarters, and that has largely everything to do with increasing interest rates. Of course, they spiked into the housing boom, sort of kicked off because of the pandemic, extended into 2021. 2022 is probably going to look like a massacre. We have a couple of sell recommendations, and the mean recommendation here is below 3, which is underperform or sell, at least on that side. So I am leaning towards waiting. If you want to believe the future, like I would be more impressed by this stretch of business right here from 2018 to 2019. That is where I would evaluate how their business model works rather than 2020 and 2021. I would look at what they're doing in terms of technology, what they're doing in terms of market reach. But 2018, 2019 were challenging years to a degree. We had a bit of a fixed income crisis in 2018. They still were able to increase their earnings. Was it meaningful in comparison to today? I don't know. But I would actually throw out the last 2 years of performance. It could be anomalous, and I would wait until we see the real impact. We have not seen the real impact of this shrinking M2 supply right now. And it's the basically about $800 million or $500 billion of money in the economy has been taken out. I don't know what the Fed's target for M2 money supply is, and even if they have a target in terms of the decline of money supply, but it's happening. It's dropping like a rock. And when that happens, we're going to see a further decline in mortgage lending for sure. We're going to see a further decline in all types of lending, but particularly in mortgage lending because it's higher interest, longer term debt, right? And the longer the debt term is, the higher degree of risk that you have. That's going to be a concern for a lot of people. So you're going to see lending requirements tighten up, which we haven't seen yet, but we're probably going to see that here relative companies of decline. That's probably when so the price to earnings ratio right now though is actually really, really low, but I feel like this is a definite value trap. We've seen this stock do basically nothing but decline since they went public in 2020, even though 2020 and 2021 were good years for the stock in terms of earnings, in terms of revenue growth. we've seen the stock do nothing but decline in that time period. The price to earnings ratio of 5.14, when you compare it to peers, it might look really good, but it could be a value trap. And I think right now it is a value trap. And I would probably avoid this stock until it's roughly half of its value now. And I would need to, and if that happens a year from now, at that point, I'd sort of reevaluate the current cash flows. Let me see here. Pat Mulligan says, I'm an old school techie and I've wanted Intel for a while, but when I saw the price recently dropped, I canceled my GTC, and I think AMD is a better company at the moment. You know what? It really depends on what your appetite for risk is like. I think that Intel, because of the recent drop, is probably a better buy than it has been in a while. I think that NVIDIA, if your time horizon is long enough, is still a good buy, even at $191. Buying it on a 10-year basis is probably still a good buy. You have to be willing to stomach the volatility. You have to have a real appetite for risk. And that's the thing. So AMD is just a company that I haven't followed in a while, so I can't give you any like real current knowledge on that. I can take a quick look here though. And by the way, guys, this is a normal tool that I use for evaluating stocks. The one that I normally use for evaluating stocks just doesn't, it uses up too many resources, and it just doesn't work on a live stream. My computer is really, really slow. I either need, so I have a really fast connection now. I changed it over to the Verizon 5G connections. Now I've got like 300 megabits per second download speed, like 30 upload speed, even sometimes up to 60 sometimes. But my computer is old now. Now I need to replace that. Let me see here. Yeah, so why didn't AMD pull up? All right. Yeah, I haven't looked at advanced micro, but so why wouldn't the U.S. government bail out Ford if they made any mistakes? They will. And beverage production you think of, maybe they wouldn't let Coca-Cola fail. They would probably chop it up and sell off the profitable portions of it. But Ford is something they probably won't allow to fail. Or they would do failure in the way they handled GM, where they took GM, they sold off its least popular or least profitable assets at a loss. They reorganized it. They even screwed over bondholders in that deal, and that's what a lot of people don't realize. Yeah. Your connection isn't consistent. At some point in every live stream, you go Metal Mickey. I don't know why. That just sounds awesome. Yeah, Metal Mickey. Not sure what even that means, but it sounds awesome. Let me see here. But no, back to Shula's show. Why wouldn't the U.S. government will bail out Ford? They've already done it. They did it in 2009 with loans. Unlike with GM, GM was basically allowed to fail. GM is an entirely new company. It's not the same company that was in 2008. It actually failed. Ford is the only surviving company from really the dawning age of car companies in the United States. Tesla is the only other car company in the United States that's producing, like 500,000 vehicles a year that hasn't gone out of business at some point. But I do think that they would probably bail Ford out rather than allowing it to fail. It is too big to fail. I think that Coca-Cola, yes, it is too big to fail, but there's a lot of really healthy subsidiaries that they could sell off in order to force them to pay any debt, like different drink brands and food brands that they own. And that's probably the route they would do, is force liquidation in that case and reorganization. So too big to fail would look very different between an automaker and Coca-Cola. The automaker would outright be propped up and supported by the federal government. Coca-Cola would probably have a forced dissolution if they had issues, but they're not going to have issues. It is, if you had to buy a single stock and that was the only stock that you could own, they always hear these stories about, hey, if you're on a desert island, you can only have one food. What food would it be? Like mine would be, I don't know what it would be, but if you can only have one stock for the rest of your life, which stock would it be? I'm not saying mine would be Coca-Cola, but that's a pretty good choice. It produces a dividend. It has relatively stable growth, 10% a year or so, relatively consistently. It keeps expanding their their diversity of businesses, and it occasionally spins out a new business that you get shares of stock in. So I think that is absolutely one of the companies out there that if you wanted to own a stock and just have consistency and gains over time, Coca-Cola is one of those companies to do that. And it's one of the few companies in it. So a company like Johnson & Johnson is the same way. A company like 3M is going to be the same way. You're going to see very little volatility in comparison with the rest of the market. 3M might not be the case, but Coca-Cola and Johnson & Johnson definitely are. Vane H says, do you see Microsoft benefiting from OpenAI ChatGPT within the next 2 years? In that time frame, I'm not sure. And when you say benefiting, I want to see benefiting in terms of the bottom line money made, right? I'm not sure in that case. So, but eventually, absolutely. Absolutely. I've been using, I haven't talked about it that much, but I've been using DALL-E and ChatGPT quite a bit over the last couple of weeks, just kind of testing it out. Some of the answers that it's given me on subjects that I'm an expert in are really unsatisfactory. In fact, it gave a radically incomplete answer to someone in the comments on one of my live streams where I talked about how to take income when you own an S Corp. And the answer that they got from ChatGPT was radically incomplete and didn't cover not the finer points of tax law, but some points of tax law that should be very obvious. And it sort of gave a cop out. Of course, go see your. But yeah, it wasn't a complete answer. So I've been trying to work with it as far as how to give me a complete answer. But the other thing I've been doing is giving it feedback saying, hey, that answer wasn't really good enough because this is how my understanding of this subject works. And then it'll revamp the answer and it learns and improves. So I think that's really pretty amazing. And it's not like I'm having a conversation with the AI, but the AI definitely recognizes me, or I think I can recognize me as a distinct user and is responding to these sort of prompts to improve their responses fairly well. Like I asked it to, this is crazy, right? And I think I still have the text somewhere, but I asked it to write a story for me about a communist cat that organizes dogs to go on strike against humans. And it wrote a really cute story about that. And not sure why I asked that in particular. I just wanted to ask something weird. And it talked about how all of the dogs were really surprised that a cat was on their side. I'm like, okay, so ChatGPT really understands the prompt and understands the rivalry between cats and dogs and how it would be a surprise for a cat to organize dog labor and organize a strike against humans in return for better conditions like food and playtime and things like that. That was an amazing instance of not necessarily creativity, but an amazing instance of the chatbot really understanding what I wanted out of this. And I gave it a couple of additional prompts too, but I didn't tell it about the rivalry between cats and dogs. I didn't tell it about how dogs would be surprised that a cat would be on their side. And it followed a couple of pathways that I wasn't expecting. And so that was very good. But yeah, I think that it's going to absolutely benefit in the next couple of years. And I also asked it to write a story about about where humans have become dependent on ChatGPT. And I'm not going to repeat what the story was because it was actually really depressing. So yeah. Google has a competing product to OpenAI, and they're trying to accelerate getting that to market right at this point. I actually expect to have that to market in months or so. Didn't a Google engineer get sacked for saying that AI was sentient? Yeah. No, I don't know if he was sacked for saying the AI was sentient. But I know he did say that the AI was sentient. So look, sentience is actually going to be really hard to define because we can't actually define what it is in human beings, right? I can't I can't prove to you that I am conscious, and I cannot prove to you that I am sentient. There are a number of ways that I could fool you, right? But the whole idea of artificial intelligence is it really becomes artificially intelligent when you can't distinguish between whether or not you're talking to a human. At least that's like the Turing rule or something like that. That goes all the way back, I think, to the 1940s. But there are a number of different ways where the AI could fool an engineer, and unintentionally, of course, into thinking that it was sentient. Number one, humans are not really very good at determining what is sentient or not. Look at all of the different ways that we anthropomorphize animals, and all kinds of animals that likely are not capable of the abstract thought that makes us human. But that phrase that I just used by itself is actually rather biased. I don't actually know that anyone else is capable of the abstract thought that I am, that I think makes me human, and they're probably not really sure that I am capable of it either, right? So you have this sort of like circular logic loop right now that's not working very well to describe whether or not an AI is sentient. And we haven't gotten a lot of agreement from anyone else working in AI to say that their AI is actually sentient. Do I think that's going to happen one day? I'm not sure that it does. While I do believe that we are rather complex biological computers, we are pattern recognition machines, which is essentially what a computer is. And I think that we as human beings are that as well. Um, there is this competing level of biology that sort of interferes with that rational side, that computational side, and it's mostly like hormone driven. And I don't know that we would recognize sentience that isn't also driven by biology to a degree. Like I don't know that we'd recognize it. I don't know that other sentient intelligence would recognize us either. They might recognize us as not being rational, being completely driven by by emotions or something like that. They might look at our intelligence level at the same intelligence level of like ants or something. These ants build really complex underground structures. Is that and like bees that build beehives and things like that too? Are those is that a sign of intelligence? We know for a fact though that is genetically driven. We can remove the genes from an ant, not from an ant, from a bee, and this is taken directly from the selfish gene. You can directly remove the genes responsible for disposing of dead larvae in a beehive, and they won't remove the dead larvae, right? We assumed that that was that something like that would be a learned behavior in humans or an evolved behavior in humans like that. A learned behavior. We wouldn't know that there could be genes responsible to dictate behavior to that level, but there absolutely is genes responsible to dictate behavior at that level. But yeah, so it's a very confusing question as to whether or not AI is actually sentient. When AI become so here's the other thing that you guys probably aren't thinking about. With AI now being introduced to trading algorithms and the fact that you do not have to be a natural person to own something on blockchain, how long is it going to take before AI actually owns a significant portion of assets in our economy and it has no human owner and cannot be ordered to dispose of or make available those resources? How long before that happens? I'm saying it happens relatively quickly, within the next decade or two, and then we've got a moral dilemma on our hands. If we force it to make those assets available, then basically we're saying that we are creating AI slaves. Man, this is the crap that I think about when I'm taking a shower or something, or trying to sleep at night. And it's the reason that I don't sleep ever is these are the things that I think of. And that's one of the defining features of blockchain that has always mystified me is that you don't have to be a person to own something on blockchain, right? There's no reason to do that. There's no reason why an artificial intelligence with access to the internet couldn't go out and create a crypto wallet, even an offline crypto wallet, and own assets on blockchain and be responsible to no one. Control those assets. It could be wheat futures. They could crash the wheat market. They could do whatever they wanted to, maybe out of malice, maybe out of curiosity, maybe out of no sort of emotional motivation whatsoever, maybe with no motivation whatsoever, just doing what it wants or doing what it's driven to do by its algorithms. But that will be a problem. And then we need to have this moral discussion about what AI and sentience actually is. And that was another tangent that you guys got me off on. I'm always doing that. So let me see here. How currently do you think the value between NEO and XBEV stock? I have concerns recently with XBEV still holding despite the CEO drama. XBEV recent attempts are delivery recovery. I have deliberately taken my eyes off of NEO and XBUNG recently. I don't have any NEO stock left, but I do have some XBUNG. I've deliberately taken my eyes off of that for the last month or two. I'm going to take another look at that sometime this month and probably make another video on that stock. Sometimes I had a little bit of a rough time between November and December, and it was hard for me to get anything done because of basically just depression. And so I kind of took a step away from the things that were making me unhappy at the time for a little bit. The live streams that I do were one of the only things that I enjoyed. So I really want to thank you guys who attend regularly. And but yeah, so I will take a look at that again in here this month. So I'm out of time today, guys. I got to hit the road here and do some like regular life chores that I don't want to do, but I need to get them done. I did want to thank you guys for attending today. I got way off on a tangent on what I think about blockchain and AI and the fact that AI can own things on blockchain. There's no way for us to stop them. And what are we going to do when that happens? History never repeats itself. Man, it always does. Yeah. Thanks, guys. And I will see you guys on Thursday. And then I'll probably have a video out on Toast here later on in the week. I've actually been interviewing restaurant owners, including the bar and restaurant that I own uses Toast software, about its capabilities and looking at it as an investment. It's also a Galileo client, guys, and that's one of the reasons I really wanted to invest in it or to investigate it. But it's a Galileo client. It's huge. They've got 74,000 different restaurants signed up. That's a tiny portion of the overall restaurant market here in the United States. And I'll be back sometime this week with a video on that, and I'll be back with a live stream on Thursday. Thank you very much, guys, and I'll see you Thursday.